Buenos días a todos. Este es un programa que llevamos esperando desde hace mucho, mucho tiempo. Tenemos aquí con nosotros a Paul Cronin de ADRIATIC Metals, empresa que todos en Momentum y desde luego en todo el FinTuit español conocemos más que de sobra. No solo eso, sino que además, según nos fuimos ayer a la cama y hoy nos despertamos para hacer esta entrevista, parece ser que la situación ha cambiado. Capi tenía aquí toda la lista de preguntas que ha tenido que rehacer con una sonrisa en la boca. Dicho esto, Capi, es el momento. Llevamos esperando esto desde hace mucho tiempo y sé que tienes muchas ganas, así que adelante. Paul. Paul, thank you for coming with us. You are more than welcome. We are so happy and so honored to have you with us here. It's a long time coming. We have been wanting to do this for a long time, and a lot of the people that listen to us and that listen to our program have been waiting for this for a long time. So please, let's go. Thank you for coming.
Yeah, this is Capi. Thank you, Paul, for arranging for this interview. And as Wayne was saying, it's kind of the perfect timing. Like I woke up like 30 minutes before starting with this interview, and I received a message from Jose, our friend from Argentina. It's always around any kind of information, and I saw the update that, in my view, I didn't have a lot of time to have a look, but it's a really, really good update, and in fact, it's answering some of the questions that we have. So in a way, I think it's a perfect timing. So
Paul, my first question would be around the round number that you have in mind for Adriatic in terms of valuation, because I think in the past you were speaking and you were talking about 3.5 Australian dollars, but of course there has been a lot of development in the past time. So I don't know if you have any other number in mind now.
Yeah, I think when I made that comment about $3.50 valuation, it was about 18 months ago when the share price was a lot lower than where it is today. And I said, this is where I'd expect it should be right now. Obviously, over that period of time, we've added a lot of value. I think most of your listeners would be very familiar with the Lassonde curve. And, as companies move out of feasibility stage and into construction stage, you do see share prices soften and they start to appreciate again as you get closer to production. And we are now becoming very close to production with about 85% of our costs are committed and about 70% of the construction is now complete. So logically, you've got to start looking at, what is the NAV for the company? I think most analysts will calculate NAV in the same way we do when we do a feasibility study, which is we look at the cash flows and we apply an appropriate discount rate to those cash flows, and we come up with an NPV. In reality, that's not a great valuation, and I think quite topically, Robert Friedland from Ivanhoe has been very vocal about this recently, where he said, the DCF valuation for companies is becoming irrelevant. And he's got a very valid point, and his point is kind of grounded on a simple concept, and that concept is scarcity. When you do economics 101 at either school or university, it's one of the first terms you use. And deposits like Rapidza are scarce. They're not very common. We did our economics on a resource that was put together in 2019 when the company had only existed for 2 years. We've been doing a lot more drilling since then. And when you look at the valuation of the company, I think you've not only got to look at the cash flows, but you've got to take a reasonable view as to what those cash flows can change to, and they would be amended by things like costs. We're all seeing increased energy costs across Europe. We're seeing increasing in wages, so that has a negative impact on that valuation. But we're also seeing an increase in commodity prices. Gold is near all-time highs. Silver is back above $25. Zinc is trading just below 3,000. Lead is performing very well, and no one really talks about lead because it's a bit of a boring, but we use it a lot. And of course, copper is performing well at numbers far above where we used it in the study. And then I think the other important thing to look at is, what is your exploration been delivering? I mean, at the end of the day, mining companies, their valuations have been driven on two principal factors. What do they have in the ground? What's their mineral inventory they've got available to develop? And what is their social license worth? And this is a concept that I think a lot of mining investors overlook, is the value of a social license. It's the value attributable to the company of having essentially the implied permission from your near mine communities and your local governments to be able to operate that mine. And those are the two things that really drive and will drive our value in the future. We will have an operating mine and plant that will be able to take ore from underground and turn it into a saleable concentrate. No problem about that. But what we also have is an expanding mineral inventory that is expanding very, very quickly now. That is going to really reshape what those cash flows look like. Because I think if you recall from our 2021 definitive feasibility study, we were producing very high cash flows for about the first 6 or 7 years, and then it starts to drop off. Under a DCF model, after 10 years, when you're using an 8% discount rate, you don't get paid a lot for what happens in year 11 and beyond. But the reality is that scarcity value of that mineral inventory has a lot of value to a lot of companies. And if you look at the big major mining companies and why they principally invest in ultra long life assets, is because they're looking at their total cost of capital. They're looking at a number of different indicators that ascribe to their valuation, including things like dividend yield, etc. That is continuing to see the value of those companies increase. And so it's really important for us to be able to demonstrate that we are able to take that mine life from a 10-year mine life to something well beyond that. And in July...
I believe that you are already there, to be honest.
Well, not officially. I think it'll become official in July when we put out a new mineral resource. But one of the things that we obviously talk about in our quarterly announcements, and when we released our quarterly at 2 o'clock this morning, you will have seen we added some commentary in there about the recent exploration and what that is delivering and what we think it means. And one of the comments I put in there was, we've intercepted a new lens of mineralisation beneath Rapitsa Northwest. Now, the interesting thing about this is it's not that interesting that we're seeing a repetition, because at the moment we've got Rapitsa Northwest, and they kind of overlap each other. So we know there's continuity of mineralisation, albeit they're stacked ore bodies. As you move further to the northwest, you've got another one underneath there. This one's really interesting because there's no barite. In every single drill hole and all of our resources, we've had high-grade barite, so 40+%. This has got no barite because the barite has been displaced, and it's been displaced because the metal grades are that high. And you can see this in the core. I do have some assay results back. You're going to see another drill hole release very soon. that will start giving the indication of what that looks like. We obviously need to do all of our checks and make sure that everything's correct that's come back from the lab, and we'll continue to do those over the coming days. But what we're clearly demonstrating here is the Rapitza system.
It's a trend.
It's complicated. It's structurally very complicated. It's geochemically quite complicated, but it is just continuing to deliver and deliver and deliver. And that is what is really going to drive that valuation moving forward. Because when you've already got a mine with, kilometres of underground development drives, it's really easy to choose a different heading and say, do you know what, we're going to go and stope that area over there. It's all within our permit. We don't need any more permits. We'll have to submit updated mine plans to the government. That process is very quick, and their approvals are quick, and they tend to allow you to proceed whilst they're doing their work. So these areas are going to add instant value to the company. And that's why we've given our exploration team a really good budget this year, because they delivered it for us in 2022. And they are continuing to deliver for us in 2023. And we're pretty excited about what this is going to mean. But what it will do is it will increase that mineral inventory quite substantially. And I know the sort of the normal course of business here is you add a lot of tons to your resource and your grade starts to trickle down. That's not going to be the case here.
Yeah,
you're going to see an increase in grade as well as an increase.
So considering everything that you have on the northwest, basically, in terms of capital allocation, it makes more sense for you to spend the money there instead of looking for buying something that you don't know that well elsewhere?
Look, at the moment, if I can do $10 million of drilling and add 10 years of mine life with an existing plant, with existing infrastructure, that's a far better use of capital. There are other considerations in our M&A strategy that have to be considered. I mean, You've got clearly single jurisdictional risk that's got to be factored in for the company. There are other parts of our broader corporate strategy, which is very much a European strategy, where we believe, there is an opportunity for a company like ours who is enshrined in really good sustainability values, not just across our board, but across our entire staff. And our sustainability report will be released in the next 2 weeks, and you will see our approach and the way we do it. And it's a very European-specific approach. And that is also going to enable us to look at projects in even jurisdictions like Spain, where that brand of sustainability is far more acceptable to governments and to communities than what you would see from a company operating in northwestern Western Australia, for example. I keep saying people have got to understand that Europe is a continent of villages, and in those villages are people who've moved there for the lifestyle benefits. They've gone to go and live in this picturesque, quiet little place because they want to raise their families in a healthy environment and they want to move out of the big cities. And if you want to work near them, you've got to really understand what their drivers are. And that's the one thing that Adriatic has done well, and why we have that social license here in Bosnia is because we spend a lot of time understanding our local community, focusing on not just what their life is now, but what they want their life to be in the future. And we've designed our project around those aspirations and tried to basically realise synergistic benefits from the mine, well above just jobs and taxes and, you know, all of those boring things. We've really tried to integrate the mine into the social and economic fabric of our communities,
Yeah.
and we have incredibly strong support. Just let me give you one example of this. So our concentrates are being dispatched seabound from the port of Ploče in Croatia. There is an existing electrified and heavily used railway line from Ploče to Sarajevo. Now, from Sarajevo to Varesh, it's an old line that hasn't really been used much in the last 20 years. It's not electrified. And we are now working with the BH National Railway Company to electrify that line. That will save about 30% shipping cost port. B, it opens that line up to be a passenger service where people can come and live in this beautiful, picturesque little town, you know, less than an hour from Sarajevo, and go to school or work by train, which is something that you and I in Western Europe,
we are more used to that, and it's kind of normal. I agree, but one important thing for me is the concept that you are using about that kind of social licensing. It's very interesting because I completely agree with you that what you did, and it's not from now, because I remember reading about the company like 2-3 years ago, and one of the things that you were saying, for example, is that you started to use contractors there in the country, you know, instead of using contractors in London or whatever. And when you were doing that, you were surprised that of course the cost was way less, but like the work was maybe even better, you know, that the one that you could get from those super expensive contractors in London. So I guess in my view that that's also part of that kind of social contract. You know, it's not kind of just pouring money there in the country, you know, but also realizing that the possibilities and the work that they can do is so good too, right?
Fostering a good relationship with the community, I guess.
Look, it is about trying to inject money into the local economy, and that's a very positive thing. We've actually tried to take that a step further. And we've partnered up with other international organisations such as EBRD, a number of microfinance organisations. We discussed these with the World Bank and with some of the embassies here about creating new supply chains, so new opportunities for Bosnian exports to reach European markets by working with those suppliers and saying, you know what, if you can create this product for us, we think that will open up a market for you elsewhere in the world. And Bosnia does have specific cost advantages. You know, it's a very engineering and entrepreneurial market, but it's got low power costs relative to the rest of the world, and it also has very low labour costs relative to the rest of Europe. That puts it in a distinct advantage. And what we've tried to do is say to some of these local companies that we've been working with, we believe that we can open up new supply chains. And if you've looked at what's happened in the last 10 years, we've seen a global dismantling or gradual of the global supply chains to focus more on Europe. And one of the things in particular that Europe is doing is it's bringing in carbon costs. So, you know, companies have got to get control of their carbon. Having large seaborne transportations or airborne shipping of goods across the world is not going to help companies reduce their carbon emissions, their Scope 3 carbon emissions.
Yeah,
and
that's
result,
the issue, because the Scope 3 now is counting, you know, as compared with the past.
Exactly. And that means that European industrial customers are looking for those services closer to home. And we have seen this through our offtake contracts, where we've been given very good terms on our offtake into companies like Boliden, for example, because it reduces their Scope 3 to buy it in Bosnia.
Quick question that I want to do is, do you think that you have that, for me, advantage that you are talking about, that is basically that you are in Europe, right? And like mines like yours in Europe, definitely. Well, I don't know if there is a single one, right? But my point is, like, do you think that European customers, like the final customers, will end up paying a kind of premium, for your metals because you are in Europe, precisely? Because it's not only that about the emissions, but also in terms of like the security, right, of like sending those metals, from the mine to the final customer, like those kind of geopolitical issues that we have seen around, that you wouldn't have if Europe is the place where you are mining, and Europe is the place where you are putting all those metals.
Yeah, I think very much so. I think we're going to see a new trend where sustainably produced primary products, whether it's metals or grain, in Europe, are going to trade at a premium to what they do in other parts of the world. We've already seen the European Union's Critical Metals Act, or Critical Minerals Act, which is doesn't go as far as, but it's a bit like the US Inflation Act, where it is designed to encourage investment within the geographic boundaries of Europe, and we are going to start seeing a growth of primary production across Europe, and that will translate across all industries, in metal, in agricultural commodities, in chemicals, in all sorts of industrial production, that says, well, if we need to build high density pipes in Europe, we're not going to buy the resins we need from China anymore. We're going to produce the resins here. And that is the new industrial revolution that we're going to be seeing in Europe. It's going to be pretty exciting. It's going to really change the landscape as we know it, to be a much more vertically integrated economy that is less reliant on other countries that may not have the same values we do in terms of the way we treat people and the way we treat our environment.
Right.
And I think that's a really important determination here.
Yeah, like the trend of nearshoring, and maybe a little bit this trend of trying to undo the joys of globalism. Clearly is gonna be an improvement there.
Yeah, I completely agree. So just going back to the kind of mining construction, because we saw the update today and it seems like definitely it's going on track. So I guess that what we would like is, like, if you can provide a bit of color, like how it has been, let's say, since you started with the construction, what were the main issues, and also, like, how did you work and fight the inflation, that I guess that for some things where it was kind of relevant there. So I think that for people would be also good to try to understand, like, what was the kind of key pain points in terms of inflation, or the main issues that you have had so far.
Yeah, I mean, inflation has affected us. There's no doubt about that. We've seen inflation come through in steel, in diesel, in wages. I think where we have managed that well is we've been able to look at design changes that minimise the impact of that inflation. We've been able to defer some of our commitments in purchasing when we saw sort of particularly steel prices go up tremendously. So let's just wait a couple of months and see if this settles down a bit. And it did. Where we haven't really been able to manage it is our exposure to diesel. We use a lot of diesel. We have a huge amount of earthworks that we have to do, particularly at the site, where the topography is very steep. The bedrock conditions under that hill are quite variable. And so you've got to do a lot of earthworks and a lot of blasting. And quite often, because of the terrain, it requires you to do multiple movements of material to be able to get all of the conditions right. And that's where we've seen costs really blow out. Now, we manage it well through being on the ground, being up there, looking at the ground conditions, continually reassessing the geotechnical conditions. But we've had to make changes to try and keep within a reasonable amount of budget. And those, that's quite dynamic. Sometimes that causes a little bit of a delay. But the delay, whether it might push something back onto the critical path for the project delivery, or it might push the critical path out, is something that we've got to make that decision on. And look, being based here and talking to the guys continually throughout the day about what's happening, what are the engineers coming back with, what's the latest view on the most recent geotechnical drilling on this potential new area, we're able to make those decisions really quickly. And the ability of making quick decisions on complex projects like this is invaluable. It really enables you to firstly engage all your staff in that decision, so we can all just sit around a table and go, right, here are the facts. This is what we think we need to do about it. There is not a mining project in the world where you set up the project schedule and the plan,
and everything works like in the PowerPoint.
It just doesn't happen like that. There's a lot of trials and tribulations along the way. And the most important thing is that you've empowered your people to make the decisions that they need to make. And here we have that culture. We have that, you will make the decision, because we have been very clear at explaining the difference to our staff between accountability and culpability, right? We will hold you accountable for a decision, but you're not necessarily going to be culpable for it. No one's going to, if you make the wrong decision, no one's going to, this isn't Yugoslavia anymore. No one's going to take you out the back and shoot you. It's okay.
But for morale, yes.
It's okay. What we want you to do is learn from your mistake and not make it again. And of course, anything that's a big decision that I have to make, and I am quite accountable like everybody else. I'm accountable to shareholders. I'm accountable to my staff and to my board. I think we have to be gritty. Like there's 200 people. That requires a lot of supervision. Where we're really happy at the moment is our health and safety stats. We've had an 81% drop in lost time injury frequency rates over one of the lowest rates in the world. And that means that, those values that we're trying to install around health and safety, and our staff engagement surveys clearly demonstrate this, is that the company is thinking about those things that really drive shareholder value, and health and safety is one of them. Right? No one wants to work for a company where your chances of getting hurt far exceed the industry average. And we've been able to bring in good people, retain good people, give them a great place, a great environment to learn and to work. And what we're now seeing is a team of young professionals, young engineers that came to us as green could be, are now really competent professionals, as good as I've worked with anywhere in the world. And that is what I'm most proud of about what we've created here. And what that means for us moving forward is as the project moves forward, these young professionals are becoming more confident in saying, do you know what? I'm happy to make this decision. I'm happy to keep this going. And the risk of further delays is diminishing because of the capability of the team that is actioning that work. I think overall we put out a little increase in project costs in this quarterly, and we've had to delay the project up to 5 weeks. That is largely being driven by earthworks.
5 weeks in mining, it's nothing, to be honest.
Yeah.
No, look, it's not a long time. And a $6 million increase on a $180 million capital is not a lot either. The most important thing, I think, for shareholders is to know that We thought that there may be cost increases coming through when we published the DFS and we arranged the package of financing, and we raised a little bit more equity. We took a bit of criticism for it at the time.
True.
Actually.
I remember that.
Yeah, but in hindsight, it turned out to be the right thing to do. And so we are now in a position where we don't need to go back to the equity markets. We can very comfortably now deliver on this project at the end of, or before the end of this year, get it into cash flow, most importantly, before the end of the year. And the guys are down going through all the details with the port this week. We've notified our off-takers of the intention for first deliveries. So things are really starting to take shape here. I think it's been, a fast-moving project, and there was plenty of opportunities to make mistakes along the way when you're moving that quickly. However, even now with the benefit of hindsight, I think we've done most things reasonably well. There's a few things we will take as key learnings, and we'll have a review, around April, May next year, where we will look back and look at what we could have done differently or done better, and how we could have done that. But I think generally we did things pretty well, and I'm quite comfortable that our shareholders that sort of have come along for this journey with us should be very comfortable in the returns that they have received and will continue to receive in terms of capital allocation moving forward, because it's not going to take us very long to repay our loans, and at which point, once that is done, we're able to hedge, we're able to pay dividends, because we have those restrictions on us at the moment.
So do you have a restriction on hedging until you pay the loans?
We require the explicit consent of our lenders if we want to hedge any of our metal exposure. We don't have a requirement to seek their permission to hedge our currency exposure.
It's interesting what you are saying, because sometimes you would think that the banks and the lenders would do it the other way around, in the sense that they prefer that you are hedging, so they have a fixed price that they can work on, but maybe here is the other way around. So why do you think that is the reason why they don't want you to hedge, or they prefer that you are unhedged at that point?
I think it's the nature of the lender, quite frankly. They're a lender that has both an equity position and a debt position.
Right.
They have a view on the underlying commodity prices, and it looks like their view was correct. So I think, generally, it was the right thing to do. Where I think we could have seen a real blowout in costs is on our US dollar euro exposure. Because we report in US dollars, but a lot of our costs are euro denominated. Bosnia, for example, has a pegged, the Bosnian convertible mark is pegged to the euro, so it's essentially a euro exposure. And we hedged that very successfully, and saved ourselves quite a lot of money in doing that very cleverly.
Okay, so now I have a very, very direct question for you that should get a short answer. Do you really believe that Rupice Northwest could be even bigger than Rupice?
Yes.
Okay. So
and I'm saying that from a position of having a lot more information than you did.
Yeah, this is why I'm asking you, not others. Okay, and in terms of permits, do you have all the permits, or do you think that it's easy to get those permits for Northwest in the near future? I mean, in terms of also landing and etc. What you are finding there, if you need kind of more land or something like that.
Yeah, so what you're asking is, do we want to move further to the northwest into the next municipal government area? Yeah, the answer to your question is no, we're not permitted to do that. So all of the drilling that we've done on Rupice is within our current law. So we don't need any more permits to explore or mine that. The one thing that it's difficult when you're looking at it on a plan map, it's sort of, why don't you go further ahead? The other issue, apart from the political boundary, is the fact that the topography on the other side of that creek is about at a 60-degree angle. I'm not getting drill rigs on there. I'm going to have to drill that from underground. And so that needs to wait a little while. Not long, but it's going to have to wait a little while until I can drill that effectively, probably toward the back end of next year. But I will still need to get permissions to drill it even from underground.
Well,
Okay,
that
and
with like a friendly environment from the government, that in your opinion is not going to be easy.
Well, as you know, in Spain, you've never got one government. There's lots of them. So
that's very true.
So to be able to drill that, I will need permissions from 4 levels of government in Bosnia. This is not a quick process, but it has to start with the municipal, then the canton, then the federation, and then the state. The state, not so much. That's more about water permits, but there is a lot of bureaucracy involved in making these changes. Now, we've done it many times before, but each time you ask for a change, you're asked for something in return, and whether that might be a commitment on your royalties or on where you're going to have your main office, because that all factors into who receives the taxation that you're paying. And so we often find, these things are always a bit of a negotiation with government. But our relationship with government is very positive. And I think our government relations team do a very good job of keeping government informed about what we're doing and why. And we tend to find that provided, with politicians in particular, as long as there's no political fallout, they're okay with it. But the civil servants in particular, the senior civil servants, the deputy ministers, they're the ones who are just saying, well, this is the rules, and as long as you follow those and go through these steps and do everything properly, we're gonna.
Okay, and another question that I have is in terms of, like, if you continue with the discoveries in Rupice, and the data that you get from the drillings is as good as it seems. Are you considering at this point, of course, just like kind of on top of your mind, because you don't have even like the first mine completed, but are you considering the possibility that you maybe need to increase the processing plant or maybe do a second one?
Yeah, so the processing plant obviously works on tons, but the back end of it works on metal content. And so it's really in your filtration and thickening systems where you're constrained by the amount of metal in your concentrates. They're relatively easy to tweak, right? That doesn't require a lot of new investment. So, for example, if we start to see that we've got a much higher grade of metal, we can look at how we might want to change that, and we can do that very quickly. The challenge with the Rupice deposit is that the recoveries are better if you get the right proportions of galena and sphaerolite. And that's where you, in your mine planning, when you're doing your grade control drilling, you're collecting that data. When you're doing your sampling of your run-of-mine stockpile, when you're sampling your crushed ore stockpile, your coarse ore stockpile, and then right throughout your online analysing systems, you've got to be very dynamic in terms of the way you're feeding that plant. And so it's not just as straightforward as going, well, that's high grade, so I'll take that first, because that high grade may give me less recoveries than something that's medium, moderate grade. And so we've done a lot of test work on this, and we're still learning about it all the time. And we'll learn as we go through the commissioning and the ramp up. But it's not as straightforward as just saying, well, we're going to go and get the high grade now. And the other thing that we are very reliant on in our project is not producing barite gives us a really good backfill product and allows us to use more paste aggregate fill than cement aggregate fill. That's a huge cost difference, tens of millions of dollars a year.
Right.
And so we've got to, you can't look at any one area in isolation. You've got to look at the whole thing as how it affects your entire operations, from your mining to your plant to your recoveries to your concentrate marketing, and then ultimately to the backfill product that you've got to create to enable you to safely mine the next stope. So there's a lot of considerations there. We're very fortunate. We've got Graham Hill, who, he's a very experienced guy, a great technical guy who understands how all of these things fit together, and is able to continually evaluate and reevaluate these scenarios. And so I'm very heavily reliant on Graham to tell me what to do in those regards.
So now I would like to move into Serbia, into Raska, because we saw the impairment there some weeks, some months ago. So we would like to understand better what was the reason. Like there wasn't what you expected there, or it's a kind of thing about that kind of discounted cash flow that we spoke. So any color, appreciate it here.
Yeah, I mean, we bought Tethyan Resources when our share price, with stock, when our share price was $1.25, and under the international financial accounting standards, we had to revalue that up as our share price went up. And basically, it started to reflect a value that was far more than that project was worth at that point in time. So there was a logical point where we needed to look at giving that a bit of a haircut. There's also, I guess, if you look at the timing of that, because we've given that a haircut now, at our group level results, we will get a tax deduction on that. And if you look at the amount of money that we are forecasting on making in 2024, in terms of net profit before tax, having that additional cost impairment as a carry forward tax loss works quite well at this point in time.
Okay, so I take it as a bit of everything in a way, right? But like, you don't sound like very, we can call it concern that that basically Raska wasn't what you were looking to be.
Oh, look, I think we were disappointed when we did the confirmation that some of the holes didn't confirm up as well as we would have hoped they would have. And we still don't really know why, whether, back in the 1980s and 90s there was selective sampling, or perhaps the labs that were being used in Serbia at the time were not accurate, or the metallurgical processes weren't correct. But largely there's a deposit there. It's a decent size. It's lower grade than we had anticipated it would be, but it works. But we need to do more exploration. And at the moment we're drilling in Serbia. We're drilling through one of the southern porphyries at the moment, and looking at that. And we've also got this huge Kaznovici license, which has a number of targets. But my biggest constraint at the moment is capital. I'm building a project here in Bosnia, and that is, from a company perspective, that's our golden goose.
Yep.
I can't go and take 5 million off my Vares exploration budget and give it to my Raska exploration budget when my Vares exploration budget is growing, is delivering a lot of high value results. So for 2023, we are going to be a bit cautious and a bit constrained in our exploration in Raska, but in 2024 we'll be very, very active again.
Okay, and now I want like another very direct answer from you if possible, and this one is on Serbia. So how likely you think that there is a trend from Kremice up to Lipovica?
Look, I think there is a trend, but you've got quite a lot of variability there.
In the grades?
In grades and metal assemblage. So I wouldn't try and look at it as one continuous ore body by any means. And, you know, the thing with Raska is it's not the Australian desert either. I've got individual farms, individual landowners. The access rights to get, you know, to drill all that out are going to be quite challenging. And you've really got to have quite high density drilling. So if you're onto something, you just sort of step out very gradually from that. And so that's where our focus has been. We've obviously drilled Substaci. There's some reasonably elevated arsenic levels in Substaci, but not in Kizovac, which means that if you want to mine Substaci, you've got to start looking at how you manage those levels. They tend not to. They tend to go into tailings, but even in tailings, arsenic creates a problem for me environmentally. Yeah, it's like the project in northern Spain. You know, one of the biggest advantages of that at the Salave deposit, despite the fact it's, you know, the whole of northern Spain has got high arsenic levels, even in soils, is that all concentrates and goes with the gold. So you're actually doing the farmers a favour by getting rid of the arsenic. But there
is only a small problem in Salave. There is only a small problem that is Asturias, right? And as being from there, I can tell you, I am authorized to do that because I'm from Asturias.
Yeah, I know. It could be worse. It could be in Galicia.
It's even worse. Interesting.
Yeah. Are you still confident on that one? One in Asturias.
Black Dragon.
Yeah.
I put in $500,000 into it last year. I want to be confident.
That sounds like that sounds like confidence to me, Wayne.
It does.
Look, I think that's a project that has a lot of potential. It's got to be done very well. It's an area there that needs investment, but it wants the right investment, and I think that's a project that's got to be handled very, very delicately. In the past, companies going out and beating the drum and talking about jobs and taxes, that's not important. What's important to those people in northern Spain is their lifestyle is preserved, and that's exactly what I was talking about earlier with Vares and with Europe. The same applies there. There's no room for ego in these things or arrogance. You've got to listen. You've got to be emotionally intelligent and politically intelligent to be able to be successful in doing these things. And it's not just about getting the permits either. It's giving those commitments and making sure you deliver on them.
Okay, perfect. So just to close on the Serbian assets, is there any kind of timeline that you have in mind to provide kind of more color on where we are with those assets to the market? Because it sounds like definitely it's not a huge priority for you now in 2023, and it's something that, to be honest, I completely understand. You have so many things, on your plate at this point. But if you can just give some color, maybe something for end of 2023 or 2024 or something like that.
2023 is about drilling, but in parallel continuing to do mapping, sampling, and geophysics, and identifying more and more targets for 2024. One thing with Serbia is it's really easy to get in and out of the rig. In Bosnia, it's quite difficult. So you will find that during 2023, our drilling budget is going to be focused on Bosnia because I've got 4 rigs here. And I can add a lot of value. My Serbian team is largely doing mapping, but I'm also bringing some of our Serbian staff here on rotation, not only as part of their professional development, but also part of just making sure we can continue to deliver on the Vares program in parallel to the Serbian one. So you will see a lot more coming out of Serbia. These porphyries are interesting, right? And 20 years ago, a 0.4 gold, 0.4 copper porphyry probably wasn't very interesting. Right now, it's super interesting.
Okay,
The world has
and
changed.
yeah, definitely. So now I will try to close with a couple of questions on macro and like an outside of of your project. But the first one is about the use of silver, because of course you have like huge grades of silver there, and it's something that in terms of the industrial use is growing a lot with the solar panels, etc. So what is your view on kind of silver consumption in the near future, considering that kind of revamp on the industrial use of the silver?
Yeah, well, look, historically, silver has been used for its precious metal value. But in 2021 was the first year we saw the industrial use of silver outstrip the precious metal demand for silver. And that's really been driven, I think, silver's the most conductive metal
Yep.
on Earth, but it's also very malleable. And so it's got a huge array of industrial uses, particularly if you need high degrees of conductivity, and that obviously goes into rapid charging. Now, if you look at Europe, where's that coming from? It's electric vehicles. It's still being used heavily in solar PV production, but it is now the demand is coming out of high-speed electric vehicle charging. And you've got, I think, in each charging unit, about 20 ounces of silver. So,
Oh, wow.
yeah, it uses a lot. And expect that to grow, because I don't have an electric car because I'm busy and I don't have time to charge it. And I forget to turn on the dishwasher before I go to bed. I'm never going to remember to charge the car. But I know that people are going to want rapid charging wherever they park. And we're going to see, as Europe continues to phase out combustion engines, dramatically, and continues to push consumers to buy electric vehicles, consumers of electric vehicles are going to want to see rapid charging stations. They want them outside the post office, they want them at the supermarket, they want them at work, they want them at home. And that is going to grow the silver demand dramatically.
Okay, and then the final one. How do you see the US dollar and the price of gold and silver in the short and medium term?
Oh, look, the world's a pretty strange place at the moment. So the US dollar is very strong, and I think it'll soften a little bit, but it'll still maintain its strength relative to its historical average. The one thing that we all rely on is the US dollar as a point of safety. And every time we see a crisis, whether it's a geopolitical crisis, a financial crisis in the last few decades, we've seen a strong US dollar. That means that, a lot of our commodity producing countries, and if you look at them outside the US, it's China, it's Australia, it's Peru, it's Chile, Canada, they are doing very, very well. What we haven't seen, though, from those periods of high margins in those mining economies is a lot of investment in exploration. This time, my view is that we're going to see a massive surge in exploration. We're already seeing majors like BHP coming up with these programs to encourage juniors to do more exploration. I think we'll see a continued trend there, where smaller companies like Adriatic are going to be starting to focus more on exploration as well as growth of their existing operations, and it's going to be really interesting. This resources boom that we're about to see is going to be very different to any of the others we've seen in the last 30 or 40 years. This one's going to be very, very interesting to watch how this plays out, because it's got currency factors, geopolitical factors, scarcity factors, and a chronic underinvestment in resource exploration and development over the past 30 years.
Okay, and now just to close, we have, let's say, a couple of minutes. So if you want to do any kind of closing remarks on anything, you can do it.
Well, look, I think, you know, here at Adriatic, we have a very clear view about what we want to be and how we want to get there. This asset is key to us, and we've got to focus on delivering it. We're also focusing on, you know, in parallel to that, resource growth, growing our mineral inventory. We're going to incentivise our staff on that basis to support that longer-term shareholder growth. And we are also going to start looking more at acquisitions in a European context. So it's going to be pretty dynamic to watch this company. It's been a fast-moving company. We're not going to slow down. We're a growth company. We're not a stuffy old British, you know, dividend stock that's just going to, you know, go through everything, go through the motions day after day. Things here change pretty fast. We're not going to apologise for it. We're going to keep doing it.
It's more like a startup than a stuffy cash cow.
Well, it is a startup. I mean, we didn't exist until 2017. And if you think where we've come from incorporation in 2017 to production in 2023, this doesn't happen very often, right?
I compliment the world, and the way you speak about the operations and the way you speak about your stuff sounds more like a startup than probably like my idea of a mining operation. So yeah.
Yeah, I've just got to get some bean bags and some Dr. Pepper.
A ping pong table is the most important thing for productivity.
Okay, thanks.
It's been a real pleasure. Really interesting to hear about this, and interesting. So lucky that we didn't know. Obviously, there was going to be a report this very night, and so nice to hear from you like right after that. Right?
No problem. It's my pleasure. Thank you very much, guys.
Thank you very much. Yeah, thank you for your time.
Paul. Take care.
Cheers.
Thank you.
Cheers. Bye now.
Thank you. Bye-bye.